Hey everybody, happy April, monthly update time. Got a lot to talk about today. A lot has happened since we spoke last. So we'll go over some macroeconomic stuff, new war in Iran. We'll take a look at the kind of the overall market, just kind of where we're at since we spoke last. We have a big deadline coming up tonight, actually. Supposedly, President Trump says that if Iran doesn't surrender by 8 p.m. tonight, that the U.S. is going to bomb Iran into oblivion. So we'll talk about how that might affect the markets. Probably not very good, and just kind of everything else that's happening out there. So a lot to talk about. Let's jump into it. All right, so let's first, before we talk about all the macro stuff that's happening with the world right now, let's just get our bearings with what's happening with the market. So on the screen here is the chart of the S&P. This back here is the pandemic bear market. This is the April of last year, really steep pullback, and this is where we're at right now. So first things first, let's draw some trend lines, see where everything is at trend-wise. So I'm going to draw two. First one is just from the pandemic lows to the April lows of last year. So it's a good long trend line. The downside is there's only two touch points. So generally with trend lines, the more touch points there are, the stronger the trend line is. I mean, you can draw a line between 82 points, really. So, but this seems to be a pretty good gauge of where the market has found support twice over the long term. The other one I want to draw is from the pandemic lows to where we're at today, kind of avoiding or skipping that April pullback or encompassing it between the two. Drawing it this way has many more touch points. We have this one, kind of this one, here and here. So the second trend line is really close to where we're at right now, and I can kind of zoom in here to give us a better idea of what's happened recently. So if you remember from last month video where we kind of thought the market looked like it was just rolling over, wanted to have a pullback, we started that, made a pretty solid 10 or so % move down from the all-time highs, which is really a common kind of round number. We also have had a 5% bounce off of those lows, which also is common. And now we're starting another leg down today, which is just that red little bar right there. So I will say that that this is a really common pattern. You can see the exact same thing happen back here in April, where first leg down was about 10%. Then we had about a 5% bounce, and then we made another 10 or so % leg down. And that's where the market actually found the bottom. So likely that is what happens here as well. So markets don't typically just go straight down and then straight back up. Usually it's a process of pullbacks and bounces and pullbacks and bounces, and we're just kind of in the middle of one of those bounces right now. Likely scenario is market wants to make another leg down and finds the actual real bottom of the market somewhere in between these two trend lines. I think it's probably unlikely that the market breaks through this trend line. Probably unlikely that the market doesn't break through this trend line. So trend line wise, that's kind of where we're at. Likely find a market bottom somewhere in here. We can also look at just kind of breakout levels. That's another useful kind of gauge on where we might be able to find some support. So if we look at like when the market breaks out to new all-time highs, right about here, and then say that market breaks out to all-time highs, comes back, retests that level, and that's where it bounces from. Same thing, here, new all-time highs, comes back, tests that area again, and then this is the most recent new all-time high breakout. And again, probably come back and test right around there. So trend lines and also breakout levels all point to this being kind of the sweet spot of where the market likely finds support and wants to move higher. So that's kind of barring any new economic developments or socioeconomic developments, wars. This morning, Trump put out a statement that said if Iran, and this deadline's been in place for a couple days now, that 8 p.m. tonight on April 7th, if Iran doesn't surrender, that Trump is going to basically destroy the entire civilization of Iran, which is a really, I mean, those are really heavy words to use. It's kind of bonkers that a president would say that kind of period. But that's what he said. And the crazy thing is that the market is down like 0.5% right now, and it looks actually like it wants to eventually go green today after a president says that. So that's crazy. But that also is a really common thing with wars. So wars, the market tends to bottom really early in wars. Within the first like 20% of a total wars kind of time frame, the market usually finds the bottom early on. And that's because the market really gets panicky about wars and really everything, but wars in particular, that a war is going to cause a recession, war is going to cause all this trouble, and they usually don't. So if you remember back to like the Russia-Ukraine war, when that first started, for the first couple of months, the market was hanging on every little piece of news that came out of Ukraine, and it would make big moves based on news that came out, and then that just finally eventually started to fade out, and then the war in Ukraine is still going on. It's been going on for years now, but the market could not care less about it anymore. It's just moved on. And it seems like that's kind of what's happening here too. Is the market was making big moves out of headlines out of Iran, but it's becoming steadier, less big, and that goes to show today. Trump makes a huge comment about the war, and then the market just kind of shrugs it off. So that's good. That means the market's probably in the process of wanting to move on from this war because again, it likely won't have that big of an economic effect on what happens with the overall economy and that kind of stuff. So, and again, like some data around specifically with the last few wars and where the market has bottomed in there. Also, the rally after wars, after the market does bottom, tends to be fairly significant. So the average rally off of the market, off the bottom of the market. During the war is 57% after the war or after the market bottoms going forward. That's a little bit skewed because the 130% move after World War II. But regardless of if we take that one out, we're still looking at an average of 40-50% of a move higher after the market does bottom in whatever war it was. So that's a good good sign going forward. And again, it's because markets don't tend to have that big of an effect on actual earnings or revenue of a company. And this is kind of a chart right now. The dark line is average analyst estimates for earnings for next year or for the next 12 months. And the gold dotted line is the market. So you can see that for the past few months, the market's been going straight down and the analyst estimates for earnings for the next 12 months have been going up. Which means that analysts don't think that this war or the economy or anything going on is going to have a big effect on corporate earnings at all, which is probably true, which just means that the market, there's a divergence between actual revenue estimates and the market, and usually divergences end up being pretty positive signs for the market when they're bullish divergences, meaning that markets going down, but earnings estimates going up. A bearish divergence would be markets going up, but earnings estimates are going down. Well, right now we're seeing a bullish divergence between those two things, which is good. It just means that we're probably setting up for a good recovery and also not a very big drawdown. So that's good. And I'll kind of end here and just say that I don't know what's gonna. I mean, no one knows what's gonna happen tonight. Iran has been very consistently and somewhat nonchalantly calling Trump's bluffs. The organization has been, or the government, the U.S. government has been kind of giving a lot of ultimatums and deadlines, and then ends up pushing those deadlines back because Iran is being really stubborn. So I'm hopeful that there is a solid plan of attack of what to do tonight, because it seems unlikely that Iran is just going to surrender. In fact, it seems basically impossible that that's what happens. But it also seems very unlikely that the U.S. just bombs Iran into oblivion. So what's going to happen is very much going to be interesting, and it's very unknown at this point. But one thing that we can find some comfort in is when you look at if you look at the overall market as like a collective psychology for the world, and it kind of is that because there's millions of market participants. They're all they're all putting their money on their opinion of what's going to happen, and the market really seems right now to not be worried at all about what's going to happen tonight after that deadline is over, and really what's going to happen with the war in general, because the market's only down a little bit even since the war started. So the collective thought process right now is that everything's going to be is going to work out fairly fine. So we'll see. We'll see what happens and adjust accordingly, obviously. But as of right now, the market doesn't seem too worried about it. So in summary, we're likely getting pretty close to finding a market bottom based on trend lines and breakout levels and a number of technical indicators. So that's good. We're probably maybe in the ballpark of 4% away from where we likely find some more reliable support, and then pending nothing else really seriously happening with the overall economy or just macro stuff out there, that's probably where we end up with this pullback, and then we start moving higher from there. So hopefully that's what happens, but we will see. As always, if you want to talk individually about your accounts and kind of go over what's been going on with it, more than happy to always meet with you. Just schedule a meeting or shoot me an email, whatever you'd like to do. But if we don't hear from you, we will talk to you in a month. Hope you're all doing well. We'll talk soon.